Imagine waking up one morning to a message that a global bank just quietly set the gears in motion for something that could affect millions of holders of a currency long shrouded in rumor and hope. That's today's headline. JP Morgan appears to be stepping into a role that few expect, and for Iraqi dinar holders, this development could change how the story unfolds. Stay with me through this whole video. I'll explain what happened, what it could mean for you, what to prepare, and what to watch for next. I'll also walk through practical steps holders should consider and honest warnings about scams and misinformation. By the end of this update, you'll have a clear, calm plan of action, not hype, not panic, just practical steps and realistic expectations. So get comfortable because in the next 22 minutes, we're going to unpack this in plain English, piece by piece, and I'll lay out the scenarios that make sense and the ones that don't. Let's get started. Today's big development centers on a global institution with deep influence, JP Morgan. Over recent weeks, there have been public moves and business agreements that show the bank is increasing its involvement with business in Iraq and related financial infrastructure. When an institution of this size makes operational changes, whether it's expanding services, signing agreements, or adjusting how it handles certain currencies, those steps aren't random. They are deliberate. For IQD holders watching for any credible sign of change, those deliberate steps are important because large banks are the plumbing of global finance. If they begin to set up processes, testing, and infrastructure that accommodate a large or unusual flow of funds tied to Iraqi currency operations, that can be read as preparation, but preparation itself is not a guarantee of a rate change or immediate reset. It is, however, a signal that the financial system is taking certain possibilities seriously enough to allocate resources and attention. In simple terms, when big banks prepare, the world notices and holder should too. But preparation is not the same as the final event. Let's be clear about what preparation looks like in practice. Banks preparing for a major currency operation would typically do several things behind the scenes: update payment and settlement systems to accept certain message formats, create or refine compliant workflows to verify currency authenticity and ownership, test logistics for secure transport and clearance, and coordinate with correspondent banks that can provide currency liquidity. These are technical and operational tasks, not flashy announcements, but they are essential. If JP Morgan or any large bank is doing this for IQD-related operations, though, are the building blocks required for any large-scale processing event? Again, these steps do not automatically mean a reset will happen tomorrow. They do mean, however, that one or more large institutions are willing to invest time and effort into the idea that they may be called upon to handle large, complex transactions involving Iraqi currency. For holders, the takeaway is practical. Preparation at the institutional level reduces one kind of friction, but individual readiness, organizing documents, verifying notes, and using licensed channels still matters a great deal. Verification, checking that a banknote is genuine, belongs to a legitimate series, and is tied to document ownership, will be one of the most important pieces in any real exchange or revaluation process. That means serial numbers, issue dates, and any documentation like purchase receipts or transfer paperwork will be scrutinized. For holders, this makes good preparation non-negotiable. Gather purchase receipts, bank record identification, and any correspondence that proves how you came to possess the notes. Organize serial numbers into an accessible list and, if possible, make high-quality photographs or scans of both faces of each note. Don't rely on memory. Most banks will require concrete documentation before they process large currency conversion. Also expect higher scrutiny for rare or high-denomination notes. These often attract additional verification because of their potential value, and because bad actors target them more frequently. Bottom line, preparation on the holder side speeds the process, reduces risk, and helps you get through institutional checks far faster than those who arrive without records. Security is another pillar that cannot be ignored. Handling large amounts of physical currency is a security challenge for both banks and individual holders. Banks have secure vaults, armored transport options, and procedures for insured shipments. Individuals must consider how they store and, if necessary, transport notes safely and legally. Don't post images publicly of serial numbers or full collections that attract scams and theft attempts. If you must move notes, use insured courier services that specialize in currency transport or coordinate directly with a licensed bank branch that offers secure intake services. Keep conversations in private channels with licensed professionals and always insist on documented receipts wherever you hand over physical notes. Security also extends to digital hygiene. Emails, messages, and social posts related to holdings can be spoofed or intercepted. Use secure, private communication for any sensitive steps and verify the identity of anyone you deal with through official channels. Protecting your assets is both practical and legal, and it preserves your ability to participate smoothly when processing becomes available. Timing is the tricky part. Even if JP Morgan and other institutions are preparing, the timing of any official currency action depends on multiple parties, central banks, sovereign decisions, regulatory clearances, and cross-border coordination. Banks can prepare for months or even years without a guarantee that a currency revaluation or redenomination will happen. For holders, this means patience is not passive, it is proactive. Prepare a paperwork, secure your notes, and stay informed through verified announcements from central banks or licensed financial channels. Avoid acting on tips that claim to have a secret date or guaranteed payout. Those claims are the seedbed for scams. Remember, major operations require synchronized action, a central bank policy decision, international clearing arrangements, and bilateral agreements among financial institutions. That orchestration takes time. The signals we're seeing now are meaningful as preparation steps, but they don't convert into instant liquidity or immediate massive payouts for holders. Approach the situation with methodical readiness instead of urgent panic or blind hope. Diversification of strategy can reduce personal risk. Don't put all your hopes on a single bank, dealer, or channel. Different institutions will have different capacities, timelines, and documentation requirements. Some may offer faster customer service or local branches capable of physical intake. Others will specialize in large institutional flows and work primarily with government or corporate counterparts. Explore licensed brokers and banks. Compare their reputations and avoid unregulated middlemen with secret-sounding offers. It's also smart to plan how you would use funds if an exchange happens. Sudden liquidity needs can create pressure to accept unfavorable terms. Think about tax implications in your country, legal requirements for large transfers, and how funds will be converted into usable assets. Spreading risk, both in where you hold documentation and in the channels you consider, give you options rather than forcing a single, potentially bad decision under time pressure. Community engagement, when done carefully, is a real advantage. There are many legitimate groups where long-time holders compare notes, share experiences about bank procedures, and discuss what paperwork was accepted during testing phases. These interactions can be helpful, but they must be filtered through common sense. Rumor travels fast, and bad information spreads faster. Use community input to find procedural tips, like which forms banks required or which branch were cooperative, but always confirm with official bank channels before acting. Keep in mind that scammers often impersonate community members or create fake success stories to lure people into paying fees or revealing sensitive information. Treat extraordinary claims with healthy skepticism and ask for verifiable proof. Networking is a tool. A timely, corroborated tip from several independent, reputable holders is worth more than a viral social post claiming a guaranteed payout. Mindset is perhaps the most underrated asset in these situations. Long-term holders know that the Dinar story has been filled with ups, downs, rumors, and extended waits. That emotional roller coaster can drive poor decisions, chasing promises, paying for special access, or taking unnecessary financial risks. Staying calm, methodical, and skeptical keeps you in control. Create a checklist of practical steps you need. Organize serial numbers. Scan receipts. Arrange secure store. Research licensed banks or dealers. And set calendar reminders to review updates from official channels. Avoid reacting to social media hype. And don't let short-term frenzy push you into irreversible choices. A steady mindset also helps you evaluate opportunities realistically, asking whether an offer is licensed, whether terms are transparent, and whether the counteroffer is verifiable. If something sounds too good to be true, it probably is. Keep your plan simple and focused on verifiable legal steps. Now, let's look at what a possible procedural pathway might actually look like if a formal action occurs. First, the central bank or government announces a redenomination or policy change. That announcement triggers bilateral communications among correspondents and large banks to set rates, liquidity allocations, and settlement windows. Banks already doing preparatory work would likely activate tested procedures, intake protocols, verification queues, and secure transfers to central authorities or their designated settlement partners. For retail holders, the bank's role will be to intake verified notes, authenticate serials and ownership, then apply the agreed conversion rate or instrument. These steps will be subject to anti-fraud, anti-money laundering, AML, and Know Your Customer (KYC) checks before funds can be released. Expect these compliance steps to be strict and documented, which is why individual preparedness matters so much. The more organized you are, the more quickly you'll move through the queue when the time comes. Let's cover the high-value note issue because it trips up many holders. When a note is rare, old, or at a high denomination, institutions will scrutinize it more closely. That scrutiny is both for authenticity and to avoid paying out on counterfeit or fraudulently obtained items. If you possess higher value series or rare notes, keep records of their provenance, where they were acquired, any prior verification, and the chain of custody. If you have appraisals or prior bank receipts that show prior checks, include them. This paperwork will speed processing and reduce the chance of rejection or extended hold times. Don't assume value is automatic. Institutional processes prioritize documented authenticity and legal ownership. Preparation for high-value notes requires extra diligence, and it pays off by minimizing delays. Now, to the practical. What paperwork should you assemble today? Start with identification, government-issued ID that matches any names on purchase documents. Then gather purchase receipts, transfer confirmations, notarized bills of sale if available, and any bank statements showing the purchase or transfer of funds used to buy the notes. Create a clear inventory. List every note's denomination, series, serial number, and condition. Take high-resolution scans or photos of both sides of each note and store those images securely offline, not on public cloud links. If you worked through a dealer, get written confirmation of the sale and the dealer's licensing information. If you engaged in private transfers, collect whatever records you were given. Put everything in a folder so you can produce it quickly when you contact a bank. The time to do this is now, not after the announcement. Warnings about scams are crucial and deserve a full minute of attention. Whenever a major financial story gains traction, fraudsters follow. Typical scams promise guaranteed high conversion rates, secret backdoor access, or require upfront fees for processing or priority. Never pay to receive your own money. Banks do not charge processing fees upfront to accept currency for verification and conversion. They may apply a legitimate transaction or service fees at the moment of conversion, but that happens during a verifiable, documented process. If someone asks for money to release a conversion or to guarantee access, that's a red flag. Also be wary of social proof traps, fake screenshots, forged emails, or manipulated documents. If you receive an offer that depends on secrecy, urgency, or upfront payment, Walk away and verify through official channels. Let's address the emotional component again. Fear of missing out. FOMO drives many mistakes after long waits. It's natural to jump at what seems like a genuine opportunity. But FOMO is exactly what scammers exploit. Create a predefined decision rule. For example, I won't accept any offer that requires payment before serve are rendered, or I will verify any bank contact through the institution's official website and phone number. Having written rules reduces impulsive behavior and protects you from being rushed into poor deals. Also, set a trusted advisor or community contact who can read an offer with you before you act. Two heads are better than one. Add a steady plan beats hype every time. Another practical step. Understand legal and tax implications in your country. If a large conversion deposits substantial funds into your account, it may create reporting requirements or tax liability. Consult a qualified tax advisor or accountant ahead of time so you aren't blindsided by reporting deadlines or unexpected withholding. Some jurisdictions require reporting of foreign currency holdings or large cash deposits. Failure to report can have penalties. Preparing for these consequences now prevents unpleasant surprises later. Keep all documentation of conversions, bank receipts, and correspondence. They will be essential for accurate tax reporting. Now, let's talk about timing again from a different angle. Operational windows. When banks coordinate large currency operations, they often create specific windows for intake, settlement, and liquidity allocation. These windows are scheduled and communicated through official channels to correspondent banks and large clients. Retail holders generally receive instructions from their receiving bank on where and when to present notes. That's why it's wise to be patient, but also proactive. Once a bank opens a verified intake window, scheduling an appointment or preparing documentation in advance will help you take advantage of that window with minimal delay. Don't flood branches unnecessarily. Follow the bank's process and use appointment systems where available. Next, what might be the market impact if a meaningful conversion happens? Market reactions depend on scale and clarity. If redenomination or a large conversion is narrowly targeted and well communicated, markets may absorb the change without dramatic ripple effects. If it's broad and sudden with unclear execution, volatility could increase in currency and equity markets that touch Iraq's economy. For individual holders, this means be cautious about promises of immediate life-changing wealth. Large conversions are often phased and settled with controls for liquidity and anti-fraud. Even with large institutional involvement, converting enormous sums into usable form. Currencies often involve staged releases, compliance holdbacks, and tax consideration. Plan conservatively for liquidity and avoid immediate emotional large purchases until funds clear and tax obligations are understood. Let's touch on the reputational angle for institution. When big banks like JP Morgan increase activity in a country, it's not purely transactional, it's also reputational. Banks operate under tight, regulatory frameworks and are mindful of their global relationships. If they step into a market, it's usually because they see a plausible, regulate path forward, or they have specific client needs tied to that market. That said, banks also move cautiously. They don't endorse speculative markets or unverified schemes. Their involvement increases the odds that the necessary operational and compliance framework can be built, but it's not a guarantee of policy decisions by a sovereign authority. For holders, this nuance matters. Bank readiness helps, but sovereign policy determines the final outcome. Now, a closer look at coordination among institutions. Currency operations of this scale require correspondent banks, settlement houses, and sometimes central bank cooperation. This means many institutions collaborate behind the scenes. They test message formats, confirm liquidity provision, and ensure compliance standards align. If JP Morgan is coordinating or expanding services, it's likely part of a broader network of institutions testing or preparing paths for legitimate flows. That network effect reduces single-point failures and increases the chance of orderly processing. Again, assuming sovereign decisions occur. For individual holders, this network reduces one friction point. Secure, tested pathways increase the odds that, when a decision happens, money can actually move, but that movement is contingent on many other players signing on and on policy clarity. Let's be practical about channels. What type of bank should you approach? Local, licensed banks with official intake programs are the first option if they are accepting notes. Large international banks with established correspondent relationship are next and often deal with institutional or government-level flows. Licensed, reputable currency exchange providers can be another path, especially for smaller conversions or consultation. Beware of private dealers offering secret rates or charging upfront processing fees. Insist on license status, written agreements, and verifiable contact information. Avoid any channel that insists on secrecy, upfront payment for special access, or unusually high guaranteed rates. Transparency and verifiability are the two simplest tests for legitimacy. Now, a short word on patience versus readiness. Being prepared does not equal being impatient. Prepare your documents, secure your notes, set decision rules, and research legitimate channels, but don't accelerate timelines based on social media claims. The steps banks make to prepare can take months to translate into real-world retail processing. If you combine readiness with calm and follow secure legal channels, you'll be positioned to act effectively when and if a legitimate process begins. Let's talk about communication. How will you hear official instruction? The most reliable sources will be official central bank releases, license, bank notices, and verified communication from correspondent institution. Social media or community groups can be helpful for procedural tips but should never replace official notices. Bookmark the central bank's official page and the websites of the licensed banks or dealers you trust. Use official phone numbers to verify any instructions you receive. Create an inbox folder where you say confirmations, appointment notices, and receipts. Record phone calls when permitted by law and always ask for written follow-ups after verbal commitments. This documented trail protects you and makes verification easier if something looks off. Next, how do you avoid being misled during the intake process? Always ask for written procedures, names, contact information, and physical addresses for where notes should be delivered. Confirm the bank's intake protocol through an official phone number listed on their verified website, not through a number or link sent to you by a third party. If someone claims to be from a bank, verify through the official switchboard and request a reference or employee ID that you confirm independently. When in doubt, pause and verify. If you feel pressure to move before you have written confirmation, that's a sign to step back. Let's look ahead. What are the realistic scenarios in the next 6 to 12 months? Scenario 1. Institutions prepare extensively but no sovereign policy is issued. Nothing changes operationally for retail holders. Scenario 2. A pilot or phased program is announced with strict intake windows and controls. Only a portion of holders can process notes initially. Scenario 3. An orderly, broad redenomination or exchange happens with coordinated international bank support and phased liquidity. Which is most likely? Preparation by banks makes scenario 2 more plausible than before. But sovereign decisions are the hinge point, and those are inherently political and economic choices. The responsible assumption is to prepare, but to manage expectations about immediacy and scale. Finally, before we close, here are concrete next steps you can take today. 1. Create a secure inventory of your notes with serial numbers and conditions. 2. Gather receipt, bank statements, and any purchase documentation. 3. Scan both sides of each note and store those images securely offline. 4. Identify licensed banks or dealers with a presence in your area and note their official contact channels. 5. Set decision rules for any offers you receive. No upfront fees. Verify through official numbers. Get everything in writing. And 6. Consult a tax advisor so you understand reporting obligations. These steps reduce risk and position you to move quickly and safely if a credible official program opens. Thanks for watching and for staying calm and informed with us. If you found this guide helpful, hit like, subscribe, and ring the bell. We do deep, practical updates like this so you can prepare, not panic. Share this video with others in the Dinar community so they can organize paperwork and protect themselves from scams. We'll keep monitoring institutional moves and official announcements closely and bring you plain English updates when there's verified news. Until next time, stay safe, stay organized, and remember, preparation and skepticism are your best tools in uncertain times.